All right, today we're going to dig into something you deal with every single week, but probably don't think too much about your trash. We're going to look at the latest report from Waste Management, or WM, and see what this absolutely essential service can tell us about the economy as a whole. So you might be thinking, it's just trash collection, right? How is that business actually booming? It might seem kind of mundane, but as we're about to see, it's a super powerful indicator of what's happening out there. And it's a surprisingly profitable business. Okay, let's start with a quote right from the top. WM CEO Jim Fish comes out swinging with a really confident statement. He's pointing to two big things here: earnings growth and free cash flow. Keep those in mind because they're going to be a running theme today. This really sets the stage for a story about a company that's not just growing, but is getting way better at turning its sales into actual cash. And here's the number that really makes you sit up and take notice: 14.9%. That's the increase in their total revenue compared to this time last year. Look, for a company this big, this established, getting double-digit growth like that, that's a huge deal. It really shows they've got some serious momentum going. But a big number like that never tells the whole story, does it? So now, let's get past the headlines and really break down where all that growth is coming from. Okay, so take a look at these numbers. You can see it right there, clear as day. Revenue? Up big time, from $5.6 billion to over $6.4 billion. And that operating EBITDA, which is just a fancy way of saying core profitability, that saw a really healthy jump too. Even the earnings per share ticked up. It's just a picture of a company that is absolutely firing on all cylinders. So where is all this cash and success really coming from? Is it some flashy new tech? Nope. It's the original bread and butter business, just picking up and getting rid of trash. This is the engine room of the whole company. And if you want proof, look no further than this number, a whopping 38.4%. That's the profit margin on their core collection business. I mean, that is just an incredibly high level of profitability for what they do. It's the financial engine that's making everything else possible. And hey, just so we're all on the same page, when we say EBITDA margin, what we're really talking about is how much profit they make from their main operations for every single dollar that comes in, before you factor in stuff like interest and taxes. So the higher that number, the more efficient and profitable they are. Simple as that. So this is the really interesting part. How did they pull that off? Were they just hauling away way more trash? Well, the numbers say not really. The actual volume of trash they collected barely moved, up just 0.2%. The real secret sauce here is pricing power. They jacked up their prices by 6%. That shows they can charge more, and their customers will pay it, which is an amazing strength to have, especially when inflation is a concern. But here's the thing. WM isn't just sitting back and counting their money from the core business. They're making some big strategic plays to expand. And that starts with a huge new bet on healthcare through their acquisition of a company called Stericycle. So what does this new division actually do? Well, it's a whole new world for them. They're handling regulated medical waste. The serious stuff from hospitals. They're also doing secure information destruction. And this move pushes them not just deeper into the US and Canada, but all the way into Western Europe for the first time. In its first full quarter on the books, this new healthcare arm brought in a cool $628 million in revenue. But notice the profit margin, 17.5%. Now, that's pretty good, but it's not anywhere near that massive 38% we saw from the main trash business, right? And that's by design. The company is playing the long game here, focusing on getting everything integrated smoothly before they start really squeezing it for profits. Okay, so alongside healthcare, WM is making another huge strategic push, and that's all about sustainability. They're pouring billions into recycling and renewable energy, basically trying to turn what we throw away into a valuable resource. And this isn't just some vague promise either. They're taking real action. Just in this past quarter, they flipped the switch on 4 major new projects: 2 plants that turn landfill gas into clean fuel, and 2 big recycling projects. You're literally watching their long-term plan come to life right here. And what's really amazing here is that even with some major challenges, and believe me, we're about to get to those, these green businesses still manage to grow their profits. That really tells you they're building something solid and valuable here for the long haul. All right, now let's talk about the big elephant in the room, the major challenge they mentioned in the report. Because while that core business is rock solid, the recycling market is getting hit with some serious headwinds. And this chart right here tells the whole story. Last year, WM was getting about $101 for a ton of recycled stuff. This year, that number has absolutely cratered to just $68. We're talking a drop of almost 35%. That's a massive hit, and it flows directly to the bottom line. And here's what that looks like in actual dollars. That price drop meant a $60 million hit to their revenue in the recycling business. Just this quarter. It's a pretty stark reminder of how much this part of their business is at the mercy of global markets. Okay, so we've got a super strong core business, some exciting new growth areas, but also one big, nasty headwind. So what does the future look like? Let's see what the company itself is forecasting. So despite that recycling mess, WM is sticking to its guns. They are reaffirming their full-year guidance. They're saying, yep, we're still going to hit our targets for profit and for free cash flow, the actual cash left over at the end of the day. That signals a ton of confidence in their overall business model. And then, looking even further out, the CEO makes this really bold prediction for 2026. He's expecting what he calls outsized growth in that free cash flow, aiming for nearly $3.8 billion. I mean, that is a super optimistic forecast, and you can bet investors are going to be holding him to that. So if you're going to boil this whole report down to one key idea, this is it. The incredibly profitable, super stable, old-school business of picking up trash is generating so much cash that it's funding these massive strategic bets on the future in healthcare and in sustainability. And that leaves us with this one last really fascinating question to chew on. We all know that trash collection is one of the most stable businesses out there. People don't stop making trash in a recession. But will these huge moves into green tech and healthcare make this essential business truly 100% recession-proof? It's a powerful strategy, and honestly, it's going to be really interesting to watch how it all plays out.